We just heard housing starts grew 1.9% in October. Join us now for more on the state of the sector and what we could see next year. Ivy Zelman, Zelman and Associates CEO. You were on Squawk Box. We shouldn't talk here, should we? Back when you were at Solomon Brothers.
Yeah, it's been a long time.
It's a few years. And then you started your own company.
Yes, 2007.
2007.
Yep. It's been a while.
Still interested in housing. You're interested in
love housing.
I know. So these numbers, listening to Diana, there are a lot of cross currents because rates are definitely higher. But her point was that some of the new home builders seem less sensitive than they're still building away because the supply issue is still with us. So they can still do this and expect to sell things at these rates. They're not being hurt by this.
Well, I mean, overall, the builders have had more resilient sales, and I think part of that is also they're really offering great value to the consumer by giving mortgage rate buydowns, and that's enabling the buyer to have less stress on affordability. So they're buying rates down as much as 2 points, and that's obviously pretty helpful. They're offering incentives, and they've got product. And while they're providing that incentive, and that could impact margins, they have product where incremental demand, there's not a lot of existing inventory.
We've seen rates come down. When do we see, is that going to be enough to get existing sales going again? Will people feel better about it? Has there been a lull because of the rise in rates at this point?
Absolutely.
Yeah.
I mean, existing home sales are right now probably at the lowest since the GFC. If you look at 4 million roughly existing home sales as a percent of households, it's kind of 3%.
Great financial crisis?
Sorry?
Yeah.
Yeah, at the GFC, sorry.
Got
yes.
it.
Great financial crisis. But I would say that rates today, the average homeowner is more than 80% or below 5%. You've got almost half below 4%. So when you start looking at that, we need a lot further decline in rates to reignite the existing home market. So I think it's going to
Nobody wants to move. That's why there's no inventory.
It's a disincentive
You've got a mortgage below 3 or 4%.
Right.
So this isn't going to work itself out anytime soon. You don't think you think 2024 flat? Nothing.
Yeah, we're looking at flat. I think the new home market just down slightly, but with respect to kind of what unsticks the market, I don't know. I think you've got the risk of distress looking out further. You kind of look at the aging population that would help move some people out. Vacancies would rise.
2026? No. 24.
By 2030,
after 24 is 25. It's much better in 25. And you already, in your business, you have to be able to make determinations about something that far off. And you
well, we try.
Yeah, and much better for 2025, a rebound even.
Well, 25, we're looking for a reacceleration off a very low base for existing home sales, only up 7%, but it still would be, on a relative basis, extremely depressed levels.
So when does the shortage of just new homes or even existing homes, how does that finally work itself out, and what year is that? Or does
well, I mean, the problem is that land prices have been accelerating. There's been no let up in land. Inflation continues to rise. So with respect to affordability and providing more affordable housing, that really, without any government support, developers just can't pencil returns to provide enough housing that's needed. The multifamily market right now is seeing deceleration in rents because of so much supply that's coming to market. And that's will provide consumers some relief.
That's the thing you asked me for. You wanted to know if we had the figures on multifamily.
Yeah, on multifamily. How are the numbers there?
Diana,
we were looking
I was
for
listening, but I didn't hear.
decline.
I didn't memorize everything they said.
We were looking for a pretty steep decline, over 30%, because right now developers, with the cost of debt, it just doesn't pencil for them to start multifamily construction. And that eventually there's 1 million units that are in backlog, which is actually the highest since the 1970s. So about over the next 2 years, as those units complete and come to market, it's going to continue to put pressure on lease rates, which ultimately, with starts plummeting, that will allow for reacceleration in starts. But for right now, I think starts are going to remain pretty depressed in multifamily, where we think there is an oversupply.
And home improvements, crappy.
I mean, it's decelerating, it's weakening, and from what our surveys show us, that we're really now below where we were in 2019. So we saw beyond normalization to pre-pandemic. And I think that, it's the consumer
Anything
wallet.
that you'd say to our viewers, buy immediately, whether it's the builder?
I mean, within housing,
yeah.
I think it's a pretty tough time right now. I mean, we had such a boom And if you look at where the consumer's wallet, their spending was so significant. They call it the honey to-do list, everything that we did while we were locked up at home.
Yep.
We're just seeing more wallet shifting to other areas, whether you talk about hospitality, travel, service. It's just not in the housing market as a priority.
When rates go up, it's just bad for housing.
Yeah, it's bad for housing.